Good morning, traders and investors. Roger Scott here, Senior Strategist for Wealth Press. Today is Monday. It's July 24th. It's officially the last week of July. It's about 7:58 in the morning. Market's going to gear up to open up in about an hour and 32 minutes. Welcome to another big week. Now, before I begin and getting into all of this, I want to remind you, please like and subscribe to our YouTube Wealth Press channel. Subscribe to our Telegram channel and visit our VIP room. It's happening at noon today, and the link is posted either above or below this video. Now let's get into all of this stuff. I'm trying to get all the beginning stuff out within the first 30 seconds so we can really begin and make the most out of this. So as you can see here, the Nasdaq is up about 39 points. The Dow's up 23 points. The S&P is meeting us in between. Now, while I'd like to say this is beyond randomness, it's not. It really is random trading action. Now, a lot of stuff to go through this week. We're going to have a very tumultuous and a potentially very volatile week. Again, I don't want to predict what's going to happen because we don't know, but I want to show you something. Look at the earnings we have this week. I mean, this week is this week and next week are the two big weeks, and then it starts slowing down just a bit. But you got Domino's today. You've got NXP Semiconductors. You've got Whirlpool. Big companies, not the biggest companies. Domino's Pizza, Cleveland Cliffs, Cadence, CDNS. I think Celeste just took a profit on this one recently, actually. Tomorrow, oh boy. You've got Alphabet, Google, and Microsoft, the double whammy. So technology is going to be impacted. Aside from that, you've got Biogen. You've got Cal-Maine Foods. You've got ADM, Triple M. You've got Dow Chemicals. You've got GE. You've got General Motors. Pulte Homes. Nothing is safe. Nothing is safe. We're getting kind of broad. And then Wednesday, we've got AT&T, Coca-Cola, Boeing, ADP, a lot of companies, and a lot. I'm just going through this right here. And then on Thursday, you've got Amazon. So a lot of companies, Crocs, Amazon, Bristol Myers. It's going to be very difficult picking trades this week on large cap stocks because they're all on earnings watch, right? But again, earnings revisions are going slightly lower. They're not getting better. Here's Friday's. And if you're watching this video, you will get a copy of this sheet later on today. I'll make sure that my staff gets it, and you'll get it via the Telegram channel and possibly email to you. But these are all the earnings for the week. I don't make this up. I get this from another site, and I copy it, and the link is right here if you ever want to visit it. I don't want to take credit for doing this because it's just not my cup of tea. But here are the earnings revisions, and here's the expectations. Now, let's talk a little bit about the actual calendar, right? My goodness gracious. So the weekly calendar, as you can see here, we have a really busy week. We've got the PMI composite. Tomorrow, we've got consumer confidence. Keep an eye on discretionary stocks. FOMC begins tomorrow, which means new home sales on Wednesday, and most importantly, the Fed will tell us whether they're going to raise rates or not. The current statistic is about a 99.8% that they are going to raise rates. If that's not enough, you've got GDP on Thursday, jobless claims on Thursday, and then personal income. And then on top of that, you have a lot of earnings. To say that this is going to be a very fragmented, very difficult week for traders is an understatement. Be very careful. Be really cautious right now, okay? You don't want to overstay your welcome in any stocks. You don't want to be in a position where earnings cause you, the stock that you're in, to open down 50%. Just be really cautious. And again, use your brain and follow these videos because I'll be giving you some revisions. And if the revisions are too far out of whack, that's danger zone. So a lot of news. Expect the market to be a little subdued. Even though we have earnings, expect some degree of the market being a little quieter as we head into the FOMC announcement. And I'll be giving you a preview of every one of these reports as the week continues. Today we have the PMI. It's not a huge report, and I'll talk about that in a minute too. Looking at the bond market. The bond market is still trading above the 20-day moving average. I like this trend. I still believe we're going to go up to 104. I don't like the fact that this was a really strong bar, followed by two down bars, two red bars, but we are still trading above the 20-day moving average. So I will still give this a chance. If it starts breaking the 20-day, probably not. But if it goes above, it'll probably go to the 104 level. It should go to the 104 level because we have quite a bit of certainty with Fed data right now, which is key to making markets move one way or the other. The more uncertainty you have, the more choppiness and volatility you have, obviously. The more certainty you have, the less two sides you have and the more smooth flight I would say you would have. So wait for the bond market to go up to 104. I still think there's some upside there. Volatility's down. There's not much volatility in the market right now. Looking at the major sectors now, I want to show you I did something different today. I took the 11 sectors and I got to change this name. It's not 11 sectors anymore. But you might or might not have noticed, I wanted to see what the 1 month strength was with all the sectors in comparison to the Russell, in comparison to the Dow Jones, in comparison to the S&P 500. So I wanted to know not just what sector is outperforming, but I also wanted to see if that sector is outperforming the broad market. And I wanted to see it over a 1 month. Right now, looking at the cumulative is very difficult because you have technology making huge gains 3 months ago, but not right now. So I want to look at it on a monthly. So you could see here, financials are leading and small caps are following, and energy is behind it on a 1 month basis. And then you have industrial, and then you have healthcare, and then you have the S&P 500. Then you have consumer discretionary. Then you have Dow Jones, material. Look where technology is right now. And most importantly, look where the individual sectors in technology are right now. QQQ is down here, all the way down here. Consumer discretionary is down here. Communication services is the last one. Communication services barely gained anything in the last month, and technology is all the way down. So if you're looking at the 1 month momentum, which is a good thing to look at right now, you could see the strength is not in technology, not in communication services, not really in consumer discretionary, although there is some strength there. But notice the blue chips and small caps are starting to outperform, like financials, Russell 2000, energy, industrial, healthcare, S&P 500. So I think the market cap is turning more into the blue chip stocks and giving blue chip stocks a little more upside at the expense of XLK, which has been going down, XLY, which is kind of going choppy. This one is still outperforming, but look at this. I don't like this red candle. This is bad. With a gap, not good. And it's already at the 20-day. It could continue going lower. And let's look at XLK technology. Still above the 20-day line, but again, I don't like this little down. I don't like this big red candle, and the fact that it didn't bounce up the second day, that it kind of went down. That's not a good sign, especially in light of all these earnings. But I thought it would be great for us to add we added the Russell, we added the Dow, we added the QQQ, we added what else did we add? I think that was it. We added the Nasdaq, we added the small caps, the Russell, the Dow, the QQQ, and the SPY. So now it's 14, right? Yeah, we added the QQQ, SPY, Russell. It's 15. Let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Yeah, it's now 15. So I got to change the name of this to 15 top sectors, right? We got to change the name here. All right. But you get my point. The point is technology right now is not leading at all. I mean, it is not leading at all. So be really, really, really cautious when you're seeing that, okay? Now, looking at the broad market, I want to show you something. Look at the small caps. Small caps are coming out here, but here's the other problem with small caps. We're now at that resistance level that I drew for you guys about a week and a half ago. And it's a really very, very important point. If we can break out of this area right here, the market could start moving to a bullish bias. Yes, bullish bias. Now, if you look at ARK, that's Kathy Woods, you could see that she's not up there just yet, which is troubling. But she has also a lot of S&P 500 stocks where the Russell 2000 is just small caps. Let me just go back to the Russell here. So we still have a chance. We still have a chance to go a little higher, but I would be very careful here. The fact that the Russell is peaking out here, the fact that large caps are losing momentum levels, as I mentioned to you earlier today. Let's go here. Did it save it? Let's see here. Oh, it didn't save it. I gotta add them again. But my point is, markets are in fact changing directional bias. Now let's talk a little bit about what to expect this week. And because you behaved yourself, I'll give you some day trading small cap stocks for Monday. Now, let me just go through what we discussed, kind of put it all together for you. and then I'll give you the small caps. So Federal Reserve's interest rate decision is coming out this week in light of all the heavyweight stocks, especially the chip stocks and the tech stocks, which aren't looking all that great. You've got Microsoft, Meta, and Google on the table this week. Oh boy. We have a 99.8 probability of a 0.25 basis point rate hike. We're going to be looking at S&P Global Manufacturing PMI. In Europe, we're looking at earnings season, the busiest week of earnings season, as I said, and sequence of central bank policy meetings. They're getting losses in consumer staples and retail stocks in Europe. In China, they closed lower as worries around the property market sparked a new wave of selling pressure, which is not good for U.S. and gambling stocks. Chinese love gambling stocks. Investors await signals from further monetary policy. They're all looking for Squirrely Powell to talk about what's ahead. Chinese property stocks listed in Hong Kong plunged to an 8-month low. That's not good. In Japan, they closed higher. Investors scaled back expectations of a hawkish policy adjustment, and strong quarterly earnings further bolstered sentiment. Now, in terms of small caps that should be on your highlight today, there are two. AMC, the stock is opening up 35% higher, and COS. These are two stocks that are opening, and this one's opening 12% higher. So there could be some really strong momentum going into these stocks today. Keep an eye on the small caps, especially the small around these levels, because I think they're going to take the rest of the market down. I don't think they're ready to break down. And the fact that we're not getting confirmation from old Kathy Woods is telling me that that's probably more likely. If the small caps start coming down, it'll push the rest of the market down. And again, with earnings this week, it's a big question mark. Be very, very careful. Don't trade. Don't fall in love with any stocks. Make sure you go with the main trend. And I'll be giving you lots of stocks, including a list today. If you behave yourselves, I'll give you a list of my hit list of all the stocks that I'm looking at possibly later today. Now, before I let you go, folks, if you know anything about Celeste Lindman, then you know she's big on following and trading the strongest trends in the market. And boy, oh boy, she's really good at it. For nearly an entire century, Wall Street has been tanking certain stocks each and every Monday. And if you know how to find them, some of these stocks tend to reverse in a matter of a day or two. And she's been on fire. Celeste has locked in on these trends, and she's been absolutely crushing it. She's hitting 12 wins in her last 13 trades, and the one she lost was like 1% or something like that. I mean, she's killing it. If you want to learn how she pinpoints these stocks, and who wouldn't, then you have to join her live for a free training session at 1 p.m. Eastern Time today. Click the link below, and Celeste will show you exactly how she does it so you can leverage it in your own trading starting today. Follow the link below this video, and remember, we've got a lot of stuff in this report that you need to pay attention to. Like our YouTube Wealth Press channel, subscribe to our Telegram channel by going to rogerscott.com/Telegram, and post comments below this video in the YouTube channel. I will respond. And remember, VIP room live at noon today. Bye.